Hi y'all, welcome back to the channel. Have you ever heard when people look and say credit cards, they're basically free money? Well, today we are going to break down the myths and truths of what credit cards actually are. We'll start off with what a credit card is, transition into what the myth of free money is, talk a little bit about, well, kind of are free money in some ways, and then finally, land in on how to actually apply for a credit card. If you're new to the channel, my name is Nathan Mohan, and I, for the past 7 years, have advised businesses on how to allocate their finances. And during that time, I learned that while there's a lot of people who are good at telling businesses what to do with their money, personal finance is still a place where people need to grow. With that, let's get into it. The way a credit card works is actually a little bit different than you might expect. So say I'm going off to the grocery store. I have my little tote bag in tow. I go in and I am ready to pick up 7 apples for the week. Like they say, an apple a day keeps the doctor away. I don't want to have any of these medical bills. And so I pack up my apples, I go scan them at the cash register, and I swipe my card. When I swipe my credit card, it's more than just a little piece of plastic. What's actually happening in the background is that a bank that's connected to this credit card is giving me the opportunity to borrow money and spend it at the grocery store. So what I'm basically doing is I'm taking a loan. And now say that for the next month, I'm using this credit card to buy groceries, get my gas, go eat at restaurants. And at the end of the day, I have borrowed $1,500 from the bank. Now, at the end of the month, the credit card company will give me back a statement. In that statement, they'll say, you have borrowed $1,500 from us. That's called a credit card balance. And you need to either pay off this current balance or alternatively provide a minimum payment to pay off the loan. This is fundamentally how all credit cards work. Now, with that being said, when you actually think about how the loan is processed, I have the opportunity to pay back my loan. And so let's say I look at it and I say, you know what? I don't really have $1,500 on hand right now. Let me just pay back $50. And so at the end of the month, we have $1,500 in our balance. We subtract out 50. Our balance for the new month is $1,450. Now, the sneaky thing about a credit card is a loan. You are borrowing money. And when you borrow money, you are charged what's known as interest. Interest is the cost to borrow money from someone or the cost of getting a loan. And usually how interest works is they will charge you a percentage of the loan that you have and add that into what you owe them for the next month. And so let's say I want to continue using my credit card and I continue to buy, continue to spend. This month, I'm still spending about $1,500, but I go on an additional date with my partner, and so that ends up being an additional $50 expense. And so when I look at my balance for this month, what ends up coming through is I have my $1,450 from last month, plus my $1,550 from this month. Remember the $50 extra for the date. Plus, I have interest on my balance from the last month. So I have that $1,450, and let's say my interest rate basically is I get charged 2% every single month. And so my last balance was $1,450. 2% of $1,450 comes out to be about $29. And so what my balance ends up being is $3,029. Now, this is where the biggest pitfall of credit cards comes into play. Let's say again, I am paying $50 to advance my minimum payment. I don't have any more money. And basically it is free money, right? Or so we think. And so now my balance for the next month, because I've paid that off, will go from 3,029 minus $50. So my starting balance going into the next month ends up being 2,979. Now, what ends up happening is I don't actually use this credit card at all. I don't want my balance to keep ticking up. And so at the end of the day, I just say, look, you know what? I'm not going to spend. But the issue is I still have a balance and interest is coming for me. The next month, they add another 2% interest. And for ease of math here, you have 2,979. A 2% interest on this is going to run you roughly about $60. And so what you end up seeing here as we do the math out is our balance has actually gone up back to $3,000. And even if we make the minimum payment here, subtract 50 out, so we subtract that 50 out, what ends up happening is our new balance ends up being higher than our old balance from the last month. And so because the balance is higher than what you had previously, you are in a cycle where even if you're making your minimum payments, you will not be able to get rid of your debt. So why does this matter? When you take on debt, even if you make the minimum payment, what that prevents you from doing oftentimes is advancing your life on larger purchases. Say, for example, you have this $3,000 credit card debt and it keeps accumulating, and you need to go and purchase a home. What the bank will do when you look to purchase a home, which you often purchase while using debt, is they'll say you have a lot of money outstanding. And so as a result, we are not going to be able to give you a loan, or the cost of the loan, aka the interest rate, is going to be much higher. And that's where it can come back to bite you. So while I'm only paying $50 a month and I've racked up a $3,000 credit card bill, the big issue here is at the end of the day, I am unable to advance my life across big ticket purchase items. With that being said, the responsible way to use a credit card is you take up and you accumulate expenses, a bill. And then from there, after the accumulation occurs, you pay off your monthly balance every single month. And in that way, you avoid any sort of interest expense that will come and hit your account. If you look at this, we've only spent $3,000 on our credit card, but our credit card balance keeps ticking higher and higher and higher above that $3,000. And that's something we want to avoid. How do people actually say credit cards are free money? It's not just because you can take a loan and swipe your card. That's a neat function of it. And people continue to say it's free money. Why? The big reason why people say it's free money is because of credit card reward programs. There's usually two types of rewards that exist in a credit card reward program. Reward number one is cash back. And so what cash back is when I swipe my credit card, say I'm going to the grocery store again, and I have $100 of groceries for the day. What cash back usually does is that it'll give you a certain percentage of your purchase back. And so say it's a 2% purchase kicker. Whenever I spend the $100, I get 2% back. My groceries actually only end up costing me $98. So in that sense, the credit card company has basically given me a little bit of free money. The other type of program is called credit card reward points. Again, if I'm going to the grocery store, I swipe my card for $100. The next month, I'm using a credit card that has points. Usually I'll get some points back. Oftentimes those points end up being a point per every dollar spent. Some credit cards do 2 points per every dollar spent. It really depends. But then I can use those points to buy different items on the credit card provider's platform. What these are most commonly used for is for travel, it is for hotels, it is for food, it is for gift cards. And as a consultant in my earlier life, I actually ended up stacking a bunch of these credit card points. Ended up paying for a lot of my vacations down the road. And so what you basically have to end up doing while you go through using a credit card is take advantage of the fact that it is giving you points and it is giving you discounts. But be cognizant of the fact that you are taking on debt and make sure to pay off your monthly balance every single month. With that being said, y'all, that's basically the general primer of credit cards. The last thing you guys need to do to actually get a credit card is to figure out how to apply. And so if we pull that up real quick, the way you apply is pretty straightforward. You basically pull up an application for a credit card that you want and you give it your personal details, name, last name, social security number, address. They will usually end up running a credit check on you in the background. A credit check is basically just saying how much debt does this individual have? Can they afford to take on any more? And then from there, they will usually issue your credit card after the fact. It doesn't take too long, probably just a week to get the credit card in the mail.